We'll be solving the problems on BFM. BFM, basically, see this. BFM is not only BFM nowadays. Many of the things in BFM are always asked for ABM also. So they are combined. Okay. So you can't compartmentalize that you'll study only ABM and not BFM, or only BFM and not ABM. Many of the, because both of them are basically based on module D. Based on Basel, right? So let's start with the motivation. When obstacles arise, you change your direction to reach your goal. You do not change your decision to get there, right? We have seen this in our COVID situation. We shouldn't change our determination to do whatever we have decided to do, right? Of course, we can change the methods of doing the things. To download Adda 24/7 app on your mobile. Tell your friends also to get the updates on various banking exams and other government exams, not only banking, various government exams. And also the study material for the same, also the video lectures for the same. You can get everything online just at a click of the button. So share it with your friends, share it with your family members on your social media, everywhere. Use this code Y432 to avail flat 77% discount on Adda 24/7 app. Share this code also, because 77% means what? Almost 1/5, right? 80% you can consider, right? Roughly 77% means let's, even if you consider this 1/4, it will be 1/4 price, roughly less than 1/4. So share it as far as possible on social media. Okay. Then let's start with the topic today. Yesterday we had done the problems on BFM, right? Today also we'll be continuing some important ones on BFM. Tricky ones, I would call it. Okay. And they are for generally 1 marks. And what's the importance of 1 marks? Everyone who has given CAIIB knows it. Means the difference between 49 and 50 carries the amount of roughly 3,000 to 4,000 per month of the increment, right? For the whole lifetime. So 49 to 50, that 1 mark difference. Okay. So that's why it's very important. So let's start. Loan rupees 100 lakhs, FDR rupees 30 lakhs. Find VR. VR means what? Value at risk. What do you mean by value at risk? Let's say if I give you some amount as a loan and I take gold as collateral from you. Okay. What is the collateral? Suppose if I give you 100 rupees and I take gold of 50 rupees, then what is my value at risk? Value at risk means which I may not get back, or we may not be able to recover. So only 50, right? That's the meaning of VR. Means whatever I have given and whatever collateral I am having of any sort, it can be. It can be commodity, gold, it can be shares, it can be my house, anything. Okay. It can be a guarantor also. Guarantor is also a part of collateral only. Remember this in court of law. Okay. So coming back, this loan 100 lakhs, FDR 30 lakhs. Now what are we assuming over here? We are assuming it over here is the FDR is of the same bank. The bank which is giving the loan, right? Point number 1. Point number 2, the maturity of FDR is more than the maturity of loan. That's what we are assuming. Okay. I'll explain both the cases. Because what happens if the FDR is of some other bank? Will you give that loan? Immediate answer of yours will be no. Why? Because you have been taught in your banking career that we can't give loans on other banks' FDR. But in retail banking, it's okay. You can't give. But in corporate banking, you can't say that no. You can give loan on other banks' FDR, subject to whenever you are giving loan on some other party's document, always keep in mind that the document should be rated by some external agency. Either external or your internal bank's agency might be. Anything it can be. But rated by some rating agency. Okay. So means generally it's CRISIL, ICRA, many of them are there. Okay, Fitch, many are there. So even S&P, all those gives all these things. Because collateral can be anything. It's not only FDR. Okay, so you can give FDR loans on FDR of some other bank only. Also in corporate banking, you'll say, but it never comes. Yeah, it can happen in corporate banking. When suppose if there is a US client, okay, he is staying in US, he is doing huge business in US, and now he has come to India for investment as well as doing some business. FDI, you can call it. Now he wants some loan from India. So what will you tell him? What do? You wind up all your money over there and bring it over here, put it in my bank, and based on that bank money, I'll give you the loan. Means you convert it into rupees. He'll kick on your back, okay, and tell you, okay, bye bye. So in that case, you have to give the loan based on some FDR or some security which he might have kept in US. Subject to, there is a rating agency which has rated that that whatever the document is, and importantly, that rating agency is trustworthy. That's important. Point number one. Point number two. Now let's say the FDR is of 2 years only, and loan is for 5 years. So what will happen? Once this FDR matures, let's say it's of your bank only, FDR. Once this FDR matures, then what will happen? This generally it gets transferred because we take the instructions immediately nowadays, maturity instructions. So it will get transferred to his savings account. And once savings or whatever instructions he might have given. And what will you do with that paper in your hand? Because amount is gone. Unless you put a freeze. Even if you put a freeze on maturity, you can stop it. That's general rule. Okay. There can be some complications over there. Of course, I can definitely prevent everything in banking because after all, it's system. But why to take that risk? Okay. Instead of taking that risk, why not to? The best thing which I can do is, why not to take that FDR for a longer period? Right? So, if the FDR is for the longer period, then no risk. Right? Now, in this question, what is the problem? 100 lakhs loan, 30 lakhs is this FDR collateral. So, this is definitely not FDOD. Right? FDOD will be always lesser than the FD amount. So this is another loan, some company loan it might be, and 30 lakhs is just taken as a collateral. So what is the value at risk? Value at risk is nothing over here now. Because 100 lakhs, nothing means this 30 lakhs is totally secured. So what is the VAR now? Only 100 minus 30, 70 lakhs, right? So because there is no risk mitigant over here, no, we can call haircut factor available over here, because FDR is of my bank and loan is of also my bank. If this FDR is of some other bank, then what? Then yesterday I told you that problem, right? C into 1 minus HC minus HFX, right? HC was what? Collateral for haircut for collateral, and HFX was what? Haircut for that foreign exchange. Yesterday, see my lecture again for yesterday. Okay. Next, in bank, tier 1 capital equals to 1000 crores, tier 2 equals to 1200 crores. So maximum tier 2 taken for VAR calculations is or CRAR calculations is. Okay. What is the rule? What do they say about tier 1 and tier 2? Tier 1 says the rule is very simple. What is tier 1 basically? Firstly, tell me what is tier 1. Tier 1 is a free capital. Free capital means what? Where I don't have to pay a fixed payment to anybody from whom I am taking the money. See this. I don't have to pay the fixed payment from anyone from whom I am taking the money. How can that be? That can be shares. What are shares? You buy the shares of some company, and does that company guarantee you the amount of payment? No. Or any dividend, do they guarantee you? No, they don't guarantee you anything, right? So in that case, that is always called as a free capital. But remember, tier 1 is not only limited to shares. Remember, it's always any capital which is free, where you don't have to pay any fixed thing. Okay, you can pay. It's not that if I give the shares of to the investors, then I can pay deposits, but it should be on my wish and will. It should not be a compulsory thing. Okay. Preference shares, that is different. Shares are of two types, right? Preference and common equity. So preference shares, that's not a part of tier 1, right? Preference shares of longer term means, there are 1,000 things. I always teach all these things during these CAIIB paid lectures. You can join that, okay? Because preference shares are also of 2-3 types. Preference shares of longer term, preference shares of shorter term, all these things. Okay, so longer term preference shares, again tier 1 capital. Short term preference shares, no tier 1 capital. Okay, there are various things attached to it. Okay, then what is tier 2 capital? Tier 2 is what? Fixed payment capital. If I take money from somebody, I'll have to pay fixed interest or EMI to that guy. What is that? Simple, any logic, any simple example? Loan which we take from the banks, we have to pay fixed EMIs, right? So that is what? That is tier 2 then. So understand the difference. Tier 2 is what? Tier 2 is where I have to make the fixed payment. Tier 1 is I don't have to make any fixed payment. It's on my wish. Okay. So what does RBI say about tier 2? There is also one more capital that is called as tier 3. Tier 3 is what? That's an emergency capital. Emergency means what? When does emergency happen? That emergency capital is used when we have some market risk. Remember, there are 3 types of risk in Basel II. Okay. So credit, operations, and market. It is not to be used for credit risk, operation risk. It is to be used for market risk only. Okay. So tier 2 equals to 1200. But how much is to be taken for this CRAR calculations? Always remember, tier 2 cannot be greater than tier 1 for this CRAR calculations. So maximum tier 1 I can take is 1000 crores. Always remember this. Keep this in mind. Maximum tier 1, 1000 crores only. Okay. Next. There is a demand loan of rupees 100 secured by bank's own deposit of rupees 125. The haircut for exposure and collateral would be 0, right? See here, demand loan of the bank, deposit of the same bank. Then what? Then where is the haircut available? Where is the risk? There's no risk. There's no maturity mismatch. Even there's no problem in the maturity. Then what? No issues in that. What is the deposit? 125. What is the loan? 100. So no risk involved and no maturities. Hence the RWA would be 0 for this. Okay. So here I take one more question of this 125. See, the question is like that. If let's say the deposit is maturing earlier, okay, then what happens? Shouldn't I give the loan? I can give the loan. I can take the calculations for the CRAR also, but there I'll have to apply the formula for maturity factor. Now, what is that maturity factor formula? That is T plus point T plus 0.25 upon T capital T minus plus 0.25, or minus it is something minus like that. Okay, but there's a formula. After applying that formula, only then will you be able to arrive at the right answer. Okay. So always remember, if there is a maturity mismatch, you can't say no. You shouldn't say no. In fact, you should apply whatever the haircut factors are for maturity mismatch and then you give the loan. Okay. That maturity mismatch problem is also taken with our live sessions, which go on every evening, 7 p.m. Okay, you can join there also. So adjusted exposure and collateral after application of haircuts would be rupees 100 and rupees 125. Net exposure for purpose of RWA would be 0. What is RWA? Anyone? What is RWA? RWA means risk-weighted asset. What is risk-weighted asset? Risk-weighted means, just now, as I told you, if I'm having some collateral, then that needs to be reduced after applying what? The haircut factor. Now understand one simple theme or simple rule in while working on Basel. Okay, what is that rule? That rule is, whenever you use any haircut for collateral, you have to reduce. Remember, you have to reduce the amount. Whenever you use any haircut for loans, you have to increase that amount. Okay, keep this thumb rule in mind. You will never go wrong in exams. Okay, so these were the basics which I wanted to explain you today. Okay, so you can join me in the live classes also. We'll get more details over there also, and follow my daily lectures over here. Okay, so you use this code Y432 to tell your friends to join the our Adda 24/7 app. You get a flat 77% discount on all the CAIIB sessions, right? Then download this Adda 24/7 app on your mobile. Tell your friends, share on the social media. Okay. Bye from my side.